My name is Lisa Tardo. I'm a registered nurse. I am the owner of Tele-Bridge Medical in San Diego County, which is a non-medical in-home care agency. Today we're going to talk about long-term care insurance. If you're considering purchasing long-term care insurance, it would be to cover in-home care or assisted living care when you need help with 2 of 6 activities of daily living. These are things like transferring from a chair to a standing position, eating, getting food from the plate to your mouth, getting dressed, if you have an incontinent issue, that type of thing. Also, if you're on hospice, it covers, or if you have dementia, long-term care would cover that. A lot of families think that Medicare will cover in-home care needs and care needs through hospice, and it does not. Medicare considers that to be custodial care. So the type of care in the house that Medicare would pay for, when you look at your insurance benefits, it'll talk about home health care. Home health care is a licensed somebody coming out to do a thing. A registered nurse to come out and do a dressing change, a physical therapist to come out and give you a therapy session. They do not provide the hour-by-hour care, bathing needs, things like that, that would be covered with home care. I know that's really confusing. I don't know why we have to call it home health and why we have to call it home care. It's so similar, but that's what they do. So when you need home care, you need to have long-term care insurance. It's the only insurance that will cover that. There is a pension benefit through the Veterans Administration. It's difficult to apply for. It's called Aids in Attendance. There is a financial means test. It's a little trickier to qualify for, but those are the 2 programs that would cover in-home care. Also, if your loved one needs to go on hospice care, a lot of people believe that hospice provides that hour-by-hour care, and they do not. Hospice will provide a nurse visit once a week. It will help you with a bath aide, someone that'll come out for 1 hour and give your loved one a bath twice a week. You get a monthly doctor visit, and you get some other benefits with hospice, but they don't provide that hour-by-hour care. They would still expect you to hire an agency like ours to provide the caregivers that are there, at the bedside doing that hour-by-hour. So it's also nice that these policies will cover that out-of-pocket expense. Medicare will only pay for the hospice portion. It will not pay for the home care agency. So that's another thing to look at as well. So let's talk a little bit about the long-term care insurance and getting it in the first place. We really recommend that you would take that out when you're in your 40s or 50s. You don't want to have a diagnosis, and you certainly don't want to be in your 60s, 70s, or 80s because the premiums would be so cost prohibitive. It probably wouldn't be worth it at that point. But if you're in your 40s and 50s and you're in good health, I really would recommend that you take a look at it. Statistically, if a husband and wife live to be age 70, one of the 2 of them will probably need some form of in-home care for up to 4 years. In-home care currently is running about $20 to $30 per hour. So if you do the math on that, it's quite expensive without insurance. So if you didn't have that insurance, your options are being cared for by a family member, if you could. The other alternatives would be some form of assisted living. And if you have any type of dementia, assisted living is no longer an option. You have to go into a memory care, and that also is very, very pricey. So I would definitely consider that to be part of your insurance portfolio, is long-term care insurance. Pretty important. So say you have insurance now, or your family member, your parents have it, and you just got notified that your parents are in a crisis and they need a caregiver. They need someone to come in. What do you need to do? You need to pull that policy out if they have the long-term care insurance, and you're looking for a benefit covered page. It's going to talk about an elimination period. The elimination period is kind of like a deductible for health insurance. So instead of a monetary value, it's a service day deductible. And they can vary depending on the policy that your folks took out. Could be 20 days, 30 days, 90 days. I've seen them 6 months. I don't recommend those really long elimination periods, even though you're saving on your premium, because usually when you first have a crisis and you determine that you need this in-home care, that's when you're using the most hours, because with in-home care, they're generally going to stabilize and get better, and they probably will end up using less hours for a time. And so you really, if all the big hours were out of pocket, you can see how that would be pretty expensive. So consider the deductible. The other thing you want to shop when you compare policies is your maximum daily benefit, and I strongly encourage an inflation rider. The reason for this is if you're paying $28, $30 an hour for care and someone needs 8, 9 hours a day of care or more, if your maximum insurance benefit is only $100 a day, that's only going to buy you 3 or 4 hours of care. And so the rest of the care is going to be out of pocket. So that may not really help you out. So I really look at those parts of your policy. Other than that, they're pretty standard now. We became regulated for insurance, so all of the policies are written pretty much the same. You must qualify to need help with 2 of 7 of your activities of daily living. That's what we talked about in the beginning: bathing, incontinence, transferring.
Now, real quick, you mentioned earlier that it was 6 daily acts of living, but you just mentioned 7. So is there a difference?
So your activity, there is some of your insurance policies will count in hospice care. So that's what puts you at 7. So transferring, going from a chair, sit to a stand, bathing, dressing, grooming, shaving, brushing your teeth, that kind of thing. Eating, getting food from your plate to your mouth, not someone preparing it, not someone going to the grocery store and getting it. It's the actual act of eating. That's usually a pretty tough one to qualify for. Dementia and hospice. Also, you look when you shop your policies, you may find that there is a waiver of premium. So once your loved one goes on claim with long-term care, your premiums may stop. So that could be a cost savings, and then you can use money that you're paying for your premium to then go and help cover you with some of those out-of-pocket expenses or the non-covered care that you may need. One of the other things you may want to consider, a lot of the policies now want you to have a licensed agency providing the care because they want some kind of supervision over the staff. Other policies will allow what they call informal care. That's where you could actually hire a family member. So say you had a grandchild or a daughter or someone that was able to do the care, and they have to chart and they have to file all the paperwork just like the agency does. It's fairly simple. But you want to look at that, see if they would recognize informal care or if they're only going to accept agency care. That would be an important part of your policy as well.
Do you want to share your personal story with long-term care with Uncle Pat?
Interestingly, a month ago, my husband was diagnosed with a terminal brain cancer. We took out our long-term care insurance when we were in our 40s. And so the premium was great. We locked in at a pretty low rate. We chose a policy with a 20-day elimination period. And we always hoped you were never going to need it, right? But being in this industry, it taught me that, if you need this kind of care, it can really get quite pricey. So I'm really grateful that we took out our policy all those years ago, because now that policy with its inflation rider is giving us a pretty robust budget and allowing us to have up to 9 hours a day of paid care. So I'm still able to go to work and do things, and then I can come home and take care of him in the evening. And it's not costing us anything. So we're really happy with that decision.
Awesome.
So in review, when we're talking about long-term care, what are some of the critical terminologies? You need to know the difference between home health care. That's what Medicare covers. That is a licensed professional coming to your home. You must be homebound. It's going to be for a short period of time, and it's going to be a licensed professional coming out to do a thing. A nurse coming out to do a dressing change. A physical therapist coming out to do a therapy. For caregiving, to get care in the home, that hour by hour care, I love to jokingly refer to it as hiring a daughter. That is home care. Sounds very similar. Home care is providing the care of activities of daily living. That's the insurance term. Those are the things like getting dressed, taking a bath, doing your grooming, your hair, your teeth, eating, getting your food from your plate to your mouth, transferring, that's getting up out of a chair or out of a bed and onto their walker or whatever device they need, a wheelchair, so that if they need assistance to transfer to their mobility aid to allow themselves to get around. Many insurance companies also recognize cognitive impairments. These are things like dementia, Alzheimer's, and they will also cover for hospice. So once you go on claim with a long-term care policy, you're saying that you need help with 2 of those activities of daily living, and that the help you require is going to take longer than 90 days. That's why it's long-term care. If it's anything less than 90 days, they will not allow you to open a claim. So you can't just go have your knee replacement and need help at home for a month and use long-term care insurance. That's not going to work. Okay? The other thing is waiver of premium. Once you go on claim, many of them will offer a waiver of premium. So that does free up some extra cash if there's a shortfall in your insurance amount that you're getting each month, because this type of care can be very expensive. For people currently that are requiring care 24 hours a day, 7 days a week in their home with licensed caregivers, those bills are close to $20,000 a month. So you can very quickly see how you could go through your assets. The other thing is we will see on some policies where the elimination period is waived if the claim is for hospice care. Because generally when you go on hospice, you're going to need all that care up front, and they know it's going to be probably for a shorter term, maybe 6 months. So usually they will, you can ask if the elimination period is going to be waived. That's a pretty common one for hospice.
Awesome. So that's pretty much it. I really appreciate your time and answering these questions and just being more informative about what long-term care is all about, and also giving the personal experience that you have with it. Thank you so much.
Happy to do that. It definitely include it in your insurance package, just like you would your life insurance, your disability insurance. It's one of those critical insurances that you should have. And if you take it out early and before you're diagnosed, it'll really protect your assets, because you could really run out of money if you had a major health issue.
Okay, awesome. Thank you so much.
You're welcome.
To learn more about Lisa's work, you can visit her website at telebridgemedical.com. And if you'd like to schedule a free consultation to help you compare the different long-term care providers before deciding on a purchase, or if you'd like to learn about our other services, please visit our website at setsailins.com. And don't forget to subscribe to our YouTube channel to be notified on new content. Thanks. We'll see you soon.